Top of the day to you, beautiful people. Joe Corbisiero coming alive, excited and full of energy. I wanted to shoot this video with you today just to talk about how we have in a recession. Is all this a frenzy where, just like it happened back in 2006, the price is going to drop? Is something major going to happen to our economy? Well, we don't have a crystal ball. All I can tell you is I've been gathering so much information the last 6 months because obviously I invest heavily in the real estate myself. So we have properties all over the places. We purchase homes. We redesign them. We help clients buying them. So, I mean, we're heavily invested. So I really want to know, in the first place, what's going to happen. So I came up with some information that really not many people talk about it. So, but let's talk about this, the forbearance and the moratorium. So what are those two words? Moratorium is in regards to the tenants or the renters, I should say. So they haven't been paying the rent. I actually have a property in Hemet, and one of the tenants out of four, they haven't been paying the rents. It's been over 7 months. So we called the attorney to figure out what to do. I'm like, hey, you can't just stop paying the rent. And guess what? You can't do anything. You can even start the eviction process. It's because they're covered all the way to September now. So meaning that if they don't want to pay, they don't have to pay. They only have to pay 25% of whatever they haven't paid all the way to September. And you cannot legally evict them. So if I look at it from an investor standpoint, I get really upset. So what are you going to do? I'm not going to pay my mortgage because you tenant you decided all of a sudden to not pay the rent anymore. And honestly, some tenants or some people, they really had a problem. Imagine people that are in the service industry, restaurants or chefs or whatnot. Restaurants have been shut down for so long. A lot of people really lost their jobs. But in reality, not all of them obviously had a decline in income. Not all of them lost their jobs. So some of them are really, really taking advantage of the situation. And you can do anything as a landlord, but unfortunately, the tenants are taking advantage of it. So this is going to be a problem in the commercial side of it, commercial residential, or even commercial itself. I've seen a lot of properties coming on the market in the last 3 to 4 months in 2021 for sale. A lot of landlords, especially the elderly ones, or the ones that have the properties held in trust, and they just don't want to deal anymore with tenants, and they put the properties on the market. On the duplex, fourplex, which is still considered residential, duplex or fourplexes, there's been an incline of properties coming on the market for the same reasons. A lot of the landlords don't want to deal with tenants anymore. So is this really helping our real estate market? Not much, because you guys watching, or buyers that want to usually buy their first home, or they want to buy a home, they're not looking to buy a duplex or a fourplex unless you're making an investment. So if you're looking to buy an investment, maybe you can find some golden nuggets right now. So there's some properties that are worth more than you could buy for. Obviously, you have to take over on the tenants. You're going to have the same issue. The best way to go between you and I in this particular situation with a moratorium is to probably do what's called cash for keys. You give people cash, $5,000 to $10,000. That's the ongoing rate to have the people move out of the property. If you can afford it, just go for it. Trust me, that's probably the best way to do and the less painful. Moving along, what is the forbearance? Forbearance, it's basically people that under the act of the COVID Act that's passed, the bill that passed, they're decided to pause their mortgage payments. Once again, pause. That doesn't mean that's the same thing that happened back in 2006 whatnot. It's simply saying they give you an opportunity to pause it and then has to be resumed. So I'm gonna read some articles that I actually took over here. For homeowners in forbearance due to COVID-19, payment deferral allows them to make up missed forbearance payments when they sell their home or refinance, says the FHFA Director Mark Calabria. This new forbearance repayment solutions responsibly simplifies options for homeowners while providing an additional tool for mortgage servicers. Borrowers who can pay their mortgage should, because missed payments remain an obligation that will ultimately have to be repaid. So The missed payments will have to be paid back by the borrower after the forbearance ends. FHFA and their enterprises do not require lump sum repayment at the end of the forbearance. Servicers, though, are required to evaluate borrowers for one of several repayment options, generally referred to as a hierarchy of repayment and loan modification options. So, talk for a second about this. What I was saying is basically you deferred your payments. What are you going to pay back? You're going to pay them back if you refinance or you sell the house for sure. Now, the smaller banks I've heard from several reliable sources, such as Navy Federal or smaller banks here local in San Diego, I don't know how many, actually, they're not abiding to this. What they're saying is they want their money back as soon as this forbearance period ends. Now, on the bigger banks, Chase, Wells Fargo, Bank of America, they're probably going to be backed up by the government. Therefore, this is the rule. They can't just come back at you that you're in forbearance and get all the money back. So I'll probably, until a month and a half ago, now we're at the end of March, I was very confident that, we wouldn't have, it wouldn't be a big deal. We wouldn't have many properties that were forced to be sold. But on the other end, knowing that some of the smaller banks are going to require a lump sum or somehow an acceleration of the mortgage, meaning that you have to catch up with your mortgage, maybe we're going to see some more inventory coming up. Well, in my opinion, it's not a big deal because the homes have been increasing in price for so much in the last 2 years. We're talking about double digit. In the last 6 to 7 months, I've seen an increase in prices depending on the obviously. Let me make this note. Depending on the price itself, if it's within the median price in San Diego, between the $500,000 to $700,000, let's say, you had an increase in the last 6-7 months of almost 10%. Some areas even more than that. So considering that, if you're in forbearance and you have to catch up with your payments, or they're requiring you to accelerate your mortgage somehow, it's not a big deal. You have plenty of equity. If you sell the house, nobody's going to go in foreclosure. Not many properties going to go on short sale. There is a lot of equity, plenty of equity. So that doesn't really concern me much, but you should understand what that means. You know what I mean? You should put that in consideration. Now, what I wanted to really share with you, we talked about obviously the moratorium and the forbearance. On the moratorium side, if you're a tenant, a renter, I should say, and you're in the moratorium period and you're not paying your mortgage, your rent, eventually you're going to be evicted. So once this is over, it's going to go on your credit, you're going to be evicted. When it comes to homeowners and people that have a mortgage, obviously there's more flexibility there and they try to help you out. So the latest forbearance and call volume survey revealed that the total number of loans in forbearance decreased from 5.53% of servicers to 5.46%. So there's not really that much. This is as per January 2021. There is 2.7 million homeowners in forbearance plans. This is across the U.S. It's not that big, really, of a number if you think about it. So if we add this, the share of Fannie Mae and Freddie Mac loans in forbearance decreased to 3.19%. So, it's quite low, a 5 basis point less. If we really talk about what happened in 2006, those are the delinquency rates by non-prime loans back in 2006. So remember this, only 5.46% of people in the U.S. are in forbearance. Forbearance, is not as bad as we all think. So it's not going to crash the real estate market. Now, if you look at this, within subprime mortgages, delinquencies have been pronounced for loans that include an adjustable interest rates component. Now, this is the first difference. Back in 2006, there were a lot of adjustable rates. Now in 2021, not many. Their interest rates are quite low. They're in the 2% or low 3s, and they're a fixed rate for 30 years. So let's start with that. The serious delinquency rates for both adjustable rate and fixed rates were about 5.6% in mid-2005, okay? This is pre-crush. But by July 2008, serious delinquencies on adjustable rate mortgage had risen over 29%. Yes, you heard. So there was 29% of their delinquencies, back then called delinquencies, compared to 5.46% today's forbearance. So big difference there. On the fixed rate, the mortgage is to 9%. So that's on the adjustable. 29% of the adjustable rates mortgages were in delinquency, and 9% of the one they were 30-year fixed. So that's a huge, difference between now and then. Now, the same thing that I want to share with you here, the average FICO credit score for the mortgages back then, it was only 612. And people that had an 80-20 ratio, so 80% mortgages, 20% down, was about 627. So we're talking about totally different scenarios. Nowadays, if you don't have, I think, majority of the clients we've been working with, and we do hundreds of transactions, they're in the high 600 to 700. There was no anymore, of subprime adjustable rate mortgages. There was, we don't have any of this. Now they're looking at your finances. They want your 2-year tax return. They want your the pay stubs, verification of employment, so much, so on, which is a great thing, honestly. So we're not going to go back into having the same problems of 2006 and all the way to 2010. So I hope this helped. I've been trying to dig in as much as possible and share the information with you watching these videos. I appreciate you very much. If you have any questions, feel free to reach out to me, my cell phone directly. I answer the phone, 760-201-9252, or send me an email, joselsandiego@gmail.com. Talk to you soon. God bless you all. Ciao.